Ever feel like you're running on a treadmill, working harder and harder just to stay in the same place financially? You get a raise, but somehow your money doesn't seem to go as far. Groceries, gas, rent, everything costs more. This isn't just a feeling, it's the reality of inflation. But here's the kicker. While most of us are feeling the squeeze, there's a group of people who are not just surviving inflation, they're thriving because of it. How is it possible that the very economic force shrinking your wallet is actually making the rich even richer? Let's unravel this mystery together. To understand this, we first need to get a clear picture of what inflation really is. In simple terms, inflation is the rate at which the general level of prices for goods and services is rising, and subsequently, the purchasing power of currency is falling. Think of it like this. The dollar in your pocket today will buy you less than it did yesterday. The central banks, like the Federal Reserve in the US, often aim for a small, steady amount of inflation, usually around 2%, believing it encourages spending and economic growth. But when inflation gets out of control, as we've seen recently, it starts to create serious problems for the average person. Your savings lose value, your salary doesn't stretch as far, and planning for the future becomes incredibly difficult. It feels like an invisible tax that eats away at your financial security. So, where's the disconnect? Why do the wealthy seem to play a different game? The secret lies in one key concept: assets versus cash. The average person's wealth is often held in cash or cash equivalents. This includes the money in your checking and savings accounts, or maybe some cash tucked away for a rainy day. When inflation hits, the value of this cash erodes. If inflation is at 5%, the $100 in your savings account will only have the purchasing power of $95 a year from now. You haven't spent a dime, but you've lost value. It's a slow, silent drain on your wealth. Now let's look at how the rich hold their wealth. They don't have massive piles of cash sitting in a bank account. That would be a terrible financial strategy. Instead, their wealth is primarily invested in assets. What are assets? These are things like real estate, stocks in public companies, ownership in private businesses, and even commodities like gold or fine art. These are what we call inflation hedging assets. They tend to increase in value at a rate that is equal to or even greater than the rate of inflation. Let's break down how this works with a few examples. First, consider real estate. Imagine a wealthy investor owns several apartment buildings. When inflation rises, the cost of living goes up, and so do rents. The investor can increase the rent they charge their tenants, so their income from the property keeps pace with inflation. But it gets better for them. The value of the property itself also tends to rise with inflation. A building that was worth $1 million might be worth $1,100,000 after a year of high inflation. So, not only is their income protected, but the underlying value of their asset has grown. And here's the real magic. If they financed that property with a loan, the debt they owe is a fixed amount. Inflation is actually eroding the real value of their debt. They're paying back a loan with dollars that are worth less than the dollars they originally borrowed. It's a triple win. Rising income, appreciating asset value, and depreciating debt. Next, let's talk about the stock market. The wealthy own a significant portion of the stock market. When inflation happens, many companies can pass on their increased costs for raw materials, for shipping, for labor, to consumers in the form of higher prices. You see this every time you go to the store. If a company can successfully raise its prices without losing too many customers, its revenues and profits will also increase. Higher profits often lead to a higher stock price. So, while you're paying more for their products, the value of the stock owned by wealthy investors is going up. They are essentially profiting from the very price increases that are squeezing your budget. Of course, not all companies do well during inflation, but a diversified portfolio of strong companies with pricing power is a classic strategy the wealthy use to protect and grow their fortunes. Another powerful tool in their arsenal is business ownership. A successful business owner has direct control over pricing. As their own costs go up, they can adjust the prices of their goods or services to maintain their profit margins. Think of a popular restaurant. If the cost of ingredients and employee wages goes up, they will raise the prices on their menu. Customers might grumble, but if the food and experience are good enough, they'll continue to pay. The business owner's income stream is protected from being devalued by inflation. In contrast, an employee has to wait for an annual review, hoping for a raise that might not even match the inflation rate. The business owner has the power to react in real time. The employee does not. So you have the rich getting richer through appreciating assets like real estate and stocks, while their debts become cheaper to pay off. At the same time, the middle and lower classes, who hold most of their wealth in cash and rely on fixed salaries, see their purchasing power and savings evaporate. It creates a widening gap, a vicious cycle where inflation transfers wealth from the poor and middle class to the asset-holding rich. This isn't some grand conspiracy theory. It's the fundamental mechanics of our modern financial system. What can the average person do about this? It can feel disheartening, but understanding the game is the first step to playing it better. The key takeaway is to start thinking like the wealthy, even on a smaller scale. This means gradually shifting your focus from just saving cash to acquiring assets. Now, I'm not a financial advisor, and you should always do your own research or consult a professional. But the principles are accessible to everyone. You don't need millions to start. You can begin investing in the stock market through low-cost index funds, which give you a small piece of many of the biggest companies. Even investing small, consistent amounts can make a huge difference over time, thanks to the power of compound growth. You can also explore ways to invest in real estate, perhaps through real estate investment trusts, or REITs, which are like mutual funds for properties. The goal isn't to get rich overnight. The goal is to put your money to work in places where it can grow and be protected from the silent erosion of inflation. It's about changing your mindset from being just a consumer and a saver to being an owner. Educating yourself about personal finance and investing is the most powerful tool you have. The information is more accessible today than ever before through books, podcasts, and channels just like this one. By understanding how inflation works and who it benefits, you can start to make strategic moves to protect your own financial future. Don't let your hard-earned money melt away in a savings account. Learn the rules of the game and start building your own portfolio of assets, no matter how small you start. It's the path to not just surviving inflation, but potentially even thriving in the long run. Thank you so much for joining me today to explore this crucial topic. I hope this gave you a new perspective on how the economy really works. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more content that helps you navigate the world of finance. I'd love to hear your thoughts in the comments below. Take care, and I'll see you in the next video.